Hey everyone, it's Eric from Option Edge, and right now I'm looking at Cisco stock. I'm in Pattern Finder by CML Viz. It's a charting AI charting software, and right now, this was from yesterday. It broke out of its 18-month resistance breakthrough, and that's indicated by this green line here. You can see that we broke clear above it and closed above it. And then what I like, a new feature of Pattern Finder, is it draws in these profit and loss lines. So you can see that, if you wanted to if you wanted to long this, you could long it and then maybe take your profits around 55. Or if this was to go down, you could take your profits at like 50 or so. So very good visualization. So what I want to do is get long using options. And for me, the smartest way and most risk-averse way to get long in something is to do a diagonal spread. Now, I've spoken many times why I think diagonal spreads are superior than just buying a call, and some of them is reduced theta decay, better break-even point, higher probability of profit, etc. So let's take a look in my brokerage platform and see how we can set this trade up. All right, so we're in the Tasty Trade platform. So I want to set this calendar spread up. So what I like to do is I like to pick the monthly expiration. So the April monthly expiration is April 21st. That expires in 3 weeks. And then the next monthly expiration would be May 19th. But there's an earnings event, so I actually want to steer clear of that earnings. So I'm going to select the May 12th for my long option. So let's actually start with the long. Okay, so let's go into the May expiry cycle. So right now we're trading about at $51.50. So this is when I first put this trade on, which was yesterday. The delta was about 66. Now it's 70. So that delta's moved in my favor. Okay, so we're going to select the 50. So let's do that again. We're going to select to buy. I can't do that because we're going to select to buy. And then, so that's good here. So let's look at the buying power and the max loss and the delta and all this other information we have here. So you can see our probability of profit is 42. Max loss is the debit paid. Debit's $228. And let's go to the short leg of this. So the short, we want to be out of the money. And remember, we want the width of the spread to be larger than the debit paid. Okay, so here we have a 35 delta, this short. I want to keep this as tight as possible, the width of the spread, without being smaller than the debit paid. Okay, so let's look at how much this is going to cost us. So let's sell. So we have both of these options selected, and you can see that our buying power is now reduced by $35, okay, which is nice. And our theta is reduced as well. And our P50 is up 81%. Let's see what it was before. Let's look at our theta and our, how do I delete the leg? Here we go. So our theta right now is negative 1.4, and our P50 is 64%, and our POP is 42%. So let's select this again. And now see our P50 jumps up almost 20%. Our theta is actually positive theta, which is interesting. So this is what we're looking to do. And so the width of the spread, we selected the 50 and the other expiration cycle, and this is the short leg is 52.5. So it's a 2.5 wide spread, and you can see that the debit paid is smaller than that. So that means we're safe. And if we go to, I'll show you an example in Robinhood of how if you violate this law of having a larger debit than the width, if the stock moves in your bullish direction, you can actually lose money if it keeps going. So let's take a look at that. All right, so we're in Robinhood. Let's look at Cisco's options chain. So let's select out the exact same thing we had in Tasty Trade. So we're going to sell the call option at 52.5. And then we're going to buy the longer dated call option that expires 42 days and on May 12th. And we're going to select the 50 call to buy. Now, like I said, the debit paid is going to be $200. So, and the width of this spread is going to be $2.50. $2 versus $2.50. $2 is smaller. So let's shorten this spread to show what can happen when the debit paid is larger than the width. As you can see, there's no, if this trade takes off and keeps going, we are still going to make money. but let's watch what happens when we change things up and shorten the spread. So let's shorten the spread. We're going to delete this leg here. Okay, we want to sell. Let's just do 51 or 52. Okay, so this spread would still work actually. This is gonna be weird because we're now going in the money here. That still works too. So let's just do 51. So what happens if the spread is too short? So this is a $1 spread. This is a $1 wide spread, 50 and 51, only $1 wide. But the cost, the debit paid, is larger than the spread. So it's about 1.6. So 1.6 is larger than 1. And you can see if this moves forward too much, we will lose money if it goes above $52. So we're going to lose money on the front end here. And unlimited upside risk, basically. So that's the problem with having the debit paid larger than the width. So that's always something you need to keep in mind.